September 13th, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using NinjaTrader 8. This is what the chart looked like today. It was this, I would say, kind of a very gradual grind up, then a consolidation. The volume and volatility weren't very high. There weren't very many setups that I could find. I did manage to take one trade, which was profitable, but it wasn't the best setup. I also want to point out that this red up channel that I found is I got a little help on this from watching other YouTubers, other traders that stream their YouTube trading throughout the day, and they were the first to actually draw this. And I thought, well, it looks like it fits pretty well because I was playing with other channels, just incorporating the data of the day. So I had something like this at one time. Go ahead and zoom in a little bit, and it was kind of having these weird violations, and I try to make it fit here, all over the place. It turns out that this red up channel fit pretty well starting from yesterday. Had the nice touches on the top side and nice touches on the bottom side, but it didn't really set up too many opportunities. There's also no economic data that came out to really move the market, except according to Forex Factory, there was a consumer, I think it was a consumer sentiment preliminary that came out at 7 a.m. Pacific Standard. It caused this really unexpected spike up, flush down, and recovery. So this red candle right here is 11.25, which is really huge. And then the recovery is like nine points as well, 9.5 points, which is wild. Now it's fortunate that there was no real setup that I could see that would have made you get caught in this, because whether your setup is clean, high probability or not, these large spikes likely would have taken out your stops on either side, because this happened in about 60 seconds. So this is why you really shouldn't trade news items unless your stops are really wide. But even then, there's nothing that says it could have bounced back and stayed within the original, where it left off. It could have just kept going down, or up. So whether you had a long or short setup, it could have been dicey either way. Now, I also want to point out that since the volume and volatility, well, more of the volume is so low, it's because if you look at the ES, this is from Thinkorswim, you can tell right here that the ES U24, which is the current contracts for trading, the September, they're expiring in 7 days. So the new ones that come into play after the expiration officially will be Z24, which will be, from October to December, the next quarter contract. You can tell the volume is really starting to pick up here. Typically on, like when it goes over to the Z and these have officially expired and the next one would be the H, you're going to see the H with very little volume. But since there's 7 days already, 7 days left, a lot of the traders and institutions are migrating their contracts, rolling them over to the next month or next quarter's contract. So these two added together should be the total volume, typically on a normal trading day where the expiration isn't in 7 days. Also by Monday, if you're using NinjaTrader, most likely they're going to roll over your contract. So you'll automatically be trading the Z contracts, unless you have something in your settings that kind of force you to keep trading the existing one, which isn't recommended because you're going to see the volume flip. There's going to be more volume on the Z contracts as opposed to the U, and then the U will slowly die down to zero and expire on Friday next week. So by next week, almost everybody will be trading on the Z contracts, with anybody still on the U's, probably large institutions or people who have hedges, kind of migrating their positions back over. So as I said, I didn't find very many setups, so hopefully the review will go rather quickly. I did find one trade, which is right here, and I'll get into it as soon as I get there. So in the pre-market, there was this very choppy move up. Then the market opens, and I see this kind of a triple test down here, but nothing really, because I was debating whether there's actually a range at one point here to here. Of course, you don't know that at the time, because at the time, you only see this as a potential triple test. So prices move up. It creates one leg, and let's go ahead and zoom in. Here it creates a first entry long pullback, second entry long. I call this an almost setup because I didn't like how this is so congested inside of trading range, but I could see it as one leg up, consolidation, a potential second leg up. But in real time, you don't know that because it looks like it's struggling to break through the pre-market highs. Technically, the pre-market high is up here, but there is some kind of resistance here. So it could easily flush back down and bounce within this bigger blue range, or in the interim, the smaller blue range. There wasn't enough room to scalp out. The only thing going for it was a break of this orange up channel. It already tested the high, but it was bouncing off the EMA. But that's just not good enough for I guess, a confident trade. So I left it alone. If prices move up, it looks like it made a measured move up. And this is where the consumer, let's see, according to Forex, it was the consumer sentiment, which as you can see here, the timestamp is 7 o'clock and 11 seconds. Then in about 12 seconds, it completed this candle, flushes down, and as you can see, another 20 seconds later. So this happens all within pretty much 1 minute, which is wild because you could tell from here, 56.27 all the way down to 56.09. That's like 18 points, pretty much 20-point move. Flashes up, flashes down, flashes back up. Seeing this in real time is wild. You don't really know what's going on because typically that piece of data doesn't really move the market, but apparently it did today. So this is good to stay out of, and there was no real setup to, ideally, if anybody saw this or was trading at this time, didn't take any weird setups because this is a little ambiguous here. And if you did take a trade, whether your thought was right or wrong, you probably would have gotten stopped out either way because this is just a very flash move that also invites a lot of slippage. Price then continue moving. It starts moving up on this green up channel. I didn't see any good clean second entries. Comes down, and as I said, I was playing with this red up channel, and it looked like there was a failed breakout here. It also looked like there was two legs, one leg down, pull up, second leg down. This failed breakout, I'm thinking in real time, is going to move back into the red channel because it's pretty strong, or at least kind of showing some kind of strength here. It creates this new high. It's a first entry long pullback, second entry long. Now it creates this higher low. The higher low isn't confirmed yet, so I get my trade ready. It actually opens here, pushes down a little bit, and while it was oscillating here, the candle, this 2000 tick candle, was getting close to closing, and it was kind of still up here. So I thought, okay, well, I'm going to enter this trade right here because I saw there's enough room to the high. This isn't the best signal bar for a higher low, but it was spending most of the time up here, and I didn't see a potential breakdown here, so I entered at the highs. Then at the last moment, it closed past its open and down here, so I thought I probably took a bad trade and it was going to get stopped out. It pushes down, it actually creates a failed second entry short. There's a first entry short, pull back, second entry short. This second entry short failure is a potential trade. You'd have to have waited for this candle to break above and over. But what happened was it broke down, flashed up, it got my profit target, and I was pretty happy because my stop was actually below this candle because it's a double bottom. Flashes up, it creates this failed second entry short. You would have to enter. I wouldn't have entered until this candle closed. So if you're trading the failed second entry short, I would have entered it after this candle closed, probably at the same high right here, or maybe at the EMA. It looked like it would have worked, so that's a possible trade. But I want to talk about the higher low trade that I was in. So I got my profit target. I moved my stop loss from one tick below here to one tick above my entry right here. And as it pushed up, it kind of floated. Then unfortunately, it came down and it just hit my stop loss and ticked me out, which is still 1 point above. So I didn't lose any money on that trade. It was kind of like a break even scratch trade. But if I had kept it at break even, I would have been able to trail this runner up. And per my strategy, I would have just stayed one tick below all the way up to here. When I see this one, seeing this, I probably would have moved my stop to one tick below this guy. And as this is coming down, this candle would have taken me out. So I think I still managed the trade correctly. I was just more conservative. I didn't want to lose any, give back anything, even on commissions. But if I had kept it right at the opening, I probably could have accumulated and taken, let's just see, from here to about, I likely would have gotten taken out right here, 12 points. So this is $600 per contract. So I'm okay with the way I handled and managed this trade and managed the runner. But in hindsight, if I was a little more aggressive, then I would have been able to ride this up. But there will be other times in the future if I take a good trade, manage the runner correctly, it won't come back, directly one tick above my entry and stop me out. So it's a little unfortunate. I did feel a little bit of FOMO, especially watching this just keep going up. Then prices continue moving up. And the same thing goes for this failed second entry short. I would have entered one tick, or probably at the EMA or one tick above. I would have gotten filled and probably still been able to write it up here. Had I entered on the failed second entry short, I think my runner probably, I would have had a more successful runner, but hard to say here or there because the trade never happened for me. Then there's a new high, first entry long pullback, second entry long failure. It's failed second entry long. This one, it was kind of taking a while to close. I didn't take the trade, but I had a hunch because it was it was a breakout here, made one attempt up, pull back a second attempt up, and this one hadn't closed yet. But as soon as it was getting close to flashing down, I was thinking there was a short trade here and a failed second entry long. It wasn't quite below the EMA decisively on a flat EMA, but I was thinking at the time there's probably a trade here. Unfortunately, I didn't take it and it flushes through. Then it bounces. Technically, I have a second entry short here, but it's not a good signal bar. Things are just too flat. It looks like it's in a trading range. And right here, you're kind of in the middle of nowhere. So it's no real decisive bias that you can tell which way to go. Then it kind of chops sideways. You get some dojis. Prices are slowing down, or price action is slowing down here. It pushes up. There's a first entry short. Second entry short isn't a good signal bar as well. So there was no trade that I could tell. And just you can probably stop watching the video now because I didn't see and mark any more trades after this. But I'm just going to talk about the rest of the chart just from my own learning. The first entry long here, second entry long, it just gets really choppy. So there's no setup, no clean setup. And a lot of these have small bodies with big wicks. I don't like when I see those. It just makes me a little nervous. I like to see very decisive moves with bodies that are at least, large enough that the wicks don't seem like they're bigger than the bodies. Then prices continue moving up. It's on a bigger scale, bigger time frame. It looks like it's because you have a first entry short here, technically a second entry short, but I saw it as a first entry short, second entry short, but potentially a spike in a channel, break, tested the new high, two pushes up. But this blue channel doesn't really, this blue resistance doesn't really matter yet because there's nothing really here backing it up until you get to about right here. Then you might have trusted it as a triple test. So I didn't even think there was a range here yet. I was thinking there was a potential range because there was 3 touches here, potentially 2 touches, and then by here, definitely a third touch. But as I was watching, there was a first entry, maybe a hidden first entry short, second entry short decisive. So if this had at least ticked one tick below or just made a more clean move, I think I would have trusted this more. And let's see, this could have been a triple test and a hidden second entry short. But by then, I was watching this to here. This is like about 4 hours of trading, and I was just getting tired, so I wasn't as sharp seeing that. Prices move down, it chops around, consolidates in this area, it kind of moves into the last hour, which is just really, really slow again. And bearing in mind, I was already profitable on this first trade that wasn't the best, but it worked out. I wasn't too ambitious on trying to get another trade. Seeing that I was green for the week, I didn't want to give potentially any profits back and just be sad and thinking about it throughout the weekend. So then it just kind of moves into the close and it sells off. So it was very, very low price action today. Not too many setups. I anticipate next week, since it's the FOMC meeting coming in, FOMC rate decision coming in on Wednesday, you're going to see a lot of this kind of slow price action, not necessarily the same structure, but just slow price action probably Monday and Tuesday. Then Wednesday is probably going to go really wild and crazy because Fed Chair Powell comes out and gives his press conference. The rate decision of probably a quarter point, maybe a half a point will be declared. And then I don't know how the market's going to take it, either be wildly happy with it and go bullish or just sell the news. So it's hard to really know what's going to happen. But Monday and Tuesday, I kind of predict that it's going to be also very slow. And then Wednesday, Thursday, Friday might pick up a little bit more. Plus, the contract will have more momentum on the new one, the Z contracts, the Z24. So hopefully that was helpful.